Hello and welcome back to Coinscrum Markets. I'm delighted to be joined again today by Patrick Heusser, Head of Trading, Crypto Finance AG. How are you doing, Patrick? Just back from holidays?
Good, and as always, it's a pleasure to be on your show. Thanks a lot.
That's okay. I think you need to go away more often, given the price rally.
Usually the market is volatile when I'm away.
Well, it's been pretty strong, so we're going to start off talking about that. I think the last couple of times we spoke, we'd been in very much in that range trading for Bitcoin down in the low 30s, Ethereum bouncing off around the 1750 mark on multiple occasions. But we've seen a strong turnaround in recent weeks. Not sure exactly what the trigger is, just after the Ethereum London hard fork upgrade. Who knows? Confidence coming back into the market. What are you thinking about it?
Well, the confidence part is definitely true. We see that in an increased volume across the board. But I followed the market very closely on the screen in the 29 to 30 area when the pump started. And it was fascinating to see how bigger accounts were really digging into it. I mean, I watched the FTX platform, the spot and the perp market, and we saw trades going through in 100, 250, and even 500 Bitcoins at once. Like some guy or some guys were buying an awful lot of Bitcoins down there. And if you look how the structure hasn't changed, so we don't see leverage in the market, we don't see funding going crazy, we don't see the curve going much in contango. So I think the retail guy missed it. So it's institutional money that were sort of buying the dips, and now let's see if the retailer starts to FOMO in when we are in this consolidation between 44 and 50.
Yeah. I mean, obviously everyone will be keeping an eye on the previous all-time highs from earlier this year to see if these can be breached or if we're just kind of forming a larger kind of range-bound pattern and corrective pattern. But I guess what's been noticeable is the kind of the relative strength of ETH and some other alts, which we can come on and discuss soon as well. Whether it's cause or effect, but we did have the successful London hard fork on the ETH network, had some impact on supply dynamics going forward, whether that had any impact overall. But what's your thoughts on this outperformance? Do you think this is something that's going to continue? We're seeing more and more ETH being staked since the ETH 2.0 upgrade back end of last year. Initially, I think there were 600,000 ETH staked on the first day or in the first week. We're up to 6.7 million. And that's clearly having an effect on liquidity in the market, surely.
I will comment later on the liquidity. Just to go back a little bit in time, the sentiment shift happened, I would say, in the middle of the large ETH BTC rally, when really ETH started to outperform. Somewhere in the middle of that large rally, I realized on my Twitter feed that some larger guys like Bitcoin, not maxis, but like proper Bitcoin holders, were sort of starting to praise ETH or making the case, yeah, you might need to look at other things as well, and I'm gonna buy some ETH now with BTC. And difficult to say if it had a knock-on effect on retail guys to go in ETH as well. But then the second part of the rally was definitely the outlook or the forthcoming upgrade of the network, where I would say the institutionals were rather cautious because they sort of have a risk averse or at least a risk management thinking of, if it goes wrong, it's gonna be shit, right? So, and the retail guy just doesn't think about it. He just buys, and then it's yay, it's gonna go up. And then, so when the London fork worked out nicely, for me it was quite not disappointing, but I was a bit surprised that we haven't seen bigger buying following. So like the risk, the the immediate risk is out of the way. It has worked. So the institutionals should come back, but that didn't really happen. But then on the other end, it was to me, it was quite a large marketing thing that all the ETH community was basically shouting out it's going to be a deflationary asset when the fork is happening. And then when the fork happened and the analysis on Dune Analytics were showing that basically most of the miners are not even processing the transactions with the new model. So what has changed? And with the ETF craziness, nothing has changed. You still pay $400 for a transaction when the market, when the chain is clocked up. Yeah. So I'm a little bit in limbo here. I don't really know what to think of ETH right now in the short term. Medium to long term, I still believe there is more strength coming, because more of the larger investors that might have been focused only on Bitcoin will also focus on Ether.
Yeah, and I guess one of the other factors I think we've discussed before, and I think we maybe just take a look at a couple of the other alts and seeing how they're performing, because you've had this big ESG conversation, and Bitcoin's around Bitcoin's energy consumption, which has kind of long been debated. We've seen relative strength in other networks that are already purely proof of stake. We've got ETH going through this dynamic of moving from proof of work to proof of stake. And maybe if we look at a couple of the other alts, such as Solana, which is a network which is definitely gaining traction, as an alternative DeFi platform, it's now reached 2 billion in total value locked. And a lot of people kind of praising its technology. Cardano, the ADA token as well, has been a strong performer. So, these are proof of stake networks. What's your thought? And is there any other alts on your radar which have been performing well?
Well, first of all, I fully sort of saw, or we at the desk, we kind of saw that coming, that there is a shift into proof of stake coins, and not because the networks are much better or the apps on top of it are a lot better than what Ethereum shows. It was purely driven by these ESG talks and political sort of marketing things that were out there. And so the shift happened because it's like momentum, right? So it just, people moved capital over there to these coins. And you mentioned Solana and Cardano. I'm fully with you on Solana because they have very cool applications on top of it. They basically built, in my opinion, the newer, faster, and cheaper DeFi compared to Ethereum. On Cardano, I really don't get it. I mean, I cannot name a single app that works on Cardano. Yeah. But the coin made a super performance. So
yeah, it is interesting to know or understand or comprehend what drives these sometimes. Look, I undoubtedly the team behind Cardano are very talented. And I've spoken to a number of developers who speak very highly of the technology itself, but ultimately it comes down to adoption and who's using these networks. So as a forward-looking statement of intent that it may achieve some of these goals, absolutely, maybe that's how price action is reflecting that. But I agree with you. It remains to be seen in terms of actual utility and who's actually building on these networks. I mean, just looping back to what you said before about the kind of mindset of your more institutional investor, maybe they held off and maybe they got some level of affirmation with the London hard fork on the Ethereum network, and that gave them some confidence to invest. On the flip side of that, and in news in the last couple of weeks, is more DeFi hacks, and quite considerable again. I mean, we had the Poly network with the $600 million hack. It turned out to be a white hat hacker, so he's returned a good portion of the funds. I think they're still currently in negotiation about the rest. There was a smaller hack on a smaller DAO operation called DAO Maker. What does this, again, we've spoken about retail in this space. The retail investors over the years have kind of accepted and known the risks. and they know they've had no one to turn to if something has gone wrong. We've seen multiple hacks. I think people, have expected this from, probably before even Ethereum was launched as a network, that there was going to be smart contract risk. How do we kind of square that circle that, on one side, institutional investors are keen to start investing in these, but surely something like a $600 million hack is not smart contract compromise is going to cause some level of concern.
Yeah, I think there are two things to this. One is we're gaining experience over the past 18 months how these hacks resolve on a positive or a negative way. We and pointing out now some details here. If a hacker is a black hacker and trying to use the funds for himself, then we saw over time now that it gets more and more and more difficult for these guys to actually cash out. So for certain amounts, it's almost impossible to cash out. And especially when the coins are large coins like Bitcoin or Ethereum, then the market doesn't tend to react an awful lot, because even if you hack 50 million in Bitcoin and you want to sell them out somewhere, market, boom, gone, the market can take it. It's not going to tank 50% just because of that. But on the other hand, I remember a few smaller hacks on the Binance chain where they took out small coins and were selling them on the platform like lunatics. Yes, obviously, then you destroy the coin and the value of the coin, and then the market reacts quite a bit, but just in that coin. And the second part is institutional started to price that risk a bit more accurate. So yes, there is smart contract risk, but I mean, if you told them that 18 months ago, that doesn't help you, right? So how do I price this? How much is it? How much yield do I need that a certain smart contract risk is appropriate to take? They learned, I'm sure they have models, I'm sure they have certain guidelines within their company, so they start to either diversify across different projects, so you're not having just one smart contract risk. And I think they price it appropriately. And I think that is giving the whole economy a more mature way how it acts with these problems, with these hacks.
Yeah, well, and if we try and put a positive slant on it as well. As you say, if they're assessing kind of yield bearing opportunities, and there's opportunities also to diversify across different, whether it's different dexes, different networks, different platforms, then we do in this world of crypto. We are seeing a free market in interest rates effectively, and with interest rates being the price of risk, maybe these are freely functioning markets how they should. And if we compare that to traditional markets right now, I don't think we've seen a free market in interest rates in the traditional economy at least since 2008, if not before.
Correct. Yeah.
So there we go. Crypto maybe kind of resetting the rules and teaching us how risk should potentially be managed.
Should be priced.
Well, yeah, and maybe without the need of regulators or central banks. So I guess that leads us swiftly into, I guess, on the subject of regulation. We spoke about proof of stake versus proof of work before. This is a topic which has been dragged into the US infrastructure bill, which has been getting a lot of headlines over the last few weeks. Seemed very onerous to begin with. There's lots of debate going on. There are some champions in the US Senate who are arguing the case and to soften the stance. The industry's kind of been very prompt in a coordinated response as well. What's your thoughts on this? What's your take on what's going on in the States?
I'm not a specialist on US politics, and I'm not really a specialist on law or a lawyer, but we had a few customers asking us exactly that question, and we do have a view on all this. The infrastructure bill is usually one of their biggest bills ever, right? And this one was a very large one. And in the end, when we looked through the critical passages, it was basically the one where how they label the different market players, and they wanted to label everyone as a broker so they can get as many tax incomes from everybody in the crypto industry, right? Because the bill needs to be a balanced bill, so they somehow need to carve out a lot of revenue out of the crypto world. It still needs to pass the House, as far as I know, so it's nothing set in stone yet, and they sort of changed a little bit of that language, and most probably they will rewrite some of it later on, so the market doesn't take it as too negative. And we also get a lot of questions asked that, well, whatever the US decides, usually the rest of the world will sort of follow in terms of regulations, but this is, to me, more tax heavy, and tax code is not synchronized at all across the globe. So if the US decides something, how to tax crypto companies, I don't think it has an immediate effect into Europe, the UK, or even Switzerland. So we are a bit more relaxed about it, but it's good that it's being discussed. Maybe a bit more time and different circumstances would have been nicer, but it's good it's being discussed, and it's in the forefront of the politicians right now.
Yeah, well, it's clearly not had an impact on or a negative impact on the price of crypto assets themselves. Do you think it might have a knock-on effect in terms of venture capital in the US? If it leaves a level of uncertainty there, and surely that's something they're bearing in mind by their very nature. They tend not to kind of push innovation overseas if they can avoid it. I mean, I'm sure that would be a concern potentially if I was a startup in the US.
Yeah, I see three parties that are affected by the bill. It's the actual service providers in exchanging coins, so exchanges, the mining industry, and the development, smart contract, DeFi, whatever you want to call it, industry. The exchanges, they're fine. They will still get VC money because they all try to be regulated. They all try to fulfill that tax form 1099. They will be good. They will still get money, and there is still a lot of margin to take. The mining companies, difficult one. It's already a very tough margin business and a very capital intensive business. And then now you have the regulatory risk that you might need to get some consumer data you don't really have, or customer data you don't really have. Not very nice. And the smart contract developers, that's the tough one for me. I mean, they build all the fancy apps, right? And some VCs are neck deep into these ventures. I don't know. I think it's the far-fetched thing to start to tax a smart contract. I don't think that will happen, but they just have it in there. But the VCs might be bold enough still to fund quite a few of these businesses. So I'm not too concerned that VCs in the US will not fund these projects anymore.
Yeah, well, and given the global nature of these networks, I'm sure that for those development teams to relocate, it might be annoying, but it's certainly not going to.
It's doable.
Yeah, and it's not going to impact long-term development, I guess. And I think that's perhaps one of the things politicians really need to start to understand. And I should imagine there's a whole bunch of them not really having too much comprehension on or deep comprehension of these technologies as well. Maybe that's kind of one of the reasons these things get put out there and then hopefully renegotiated to a sensible level. But we will see over time. So just finally, just a couple of things in terms of, I guess, sentiment on the market. And we've spoken forever. Everyone's spoken forever about Bitcoin ETFs. I saw this week Galaxy have submitted
Yep.
an application for a derivatives-based Bitcoin ETF. So I guess bypassing the spot market where there's been lots of concerns, but I think it's the fifth application or such application that's gone in anyway. Do you think it's going to make any difference?
For me, it's a tough one to see what the difference will be on a short-term scale. If they don't make it, the market won't move. If they do make it through immediately or imminently, the market will not do anything either. The structure of the market might change. So if I haven't really looked through their application, but any ETF that is spot-based will have an effect on the structure or the leverage of the market, right? If you're a market maker or an ETF provider and customers are constantly buying the ETF, you probably not going to buy the hedge in spot straight away. So you're going to hedge yourself with derivatives and you buy the spot later on. That will create leverage in the market and will sort of create a shortage of dollars in the ecosystem, which is already there, but it will increase the shortage of dollars on a constant basis. So we might see a contango curve, a quite steep contango curve for a longer period of time when an ETF is launching and getting steady inflows. A bit like the grayscale effect, right?
Yeah, yeah.
That's the only thing I would see medium to long term if an ETF gets listed that is actually getting some traction, some proper traction.
Yeah, no, definitely an interesting observation. Let's see how it pans out. Just to finish up, I guess, the battle's going on in Wall Street. Saw again in the news, Michael Berry, famous for The Big Short during the 2008 crisis, spotted the risks in the housing market and collateralized debt obligations. He's in recent times, he's kind of not spoken too positively about Bitcoin. Kathy Wood, I guess on the flip side, well known for her ARK Invest funds. In particular, ARK Invest having an innovation ETF, which does include, I think, the Grayscale Trust, plus companies such as Coinbase and other listed blockchain-related firms. Michael Berry's bought some options, betting against the innovation ETF. Who's going to win, Michael or Kathy?
Can you give me the maturity date of the option?
I'm not sure. I didn't actually see the details.
Okay, because I haven't seen it either. Because
I know it's not very helpful, actually.
He might be right on a short-term scale that we see some corrections across the ecosystem in some parts. But then on the other hand, I mean, the earnings of Coinbase were quite good, and other exchanges will show good earnings too. And honestly, I think it's a brave bet. It might not going to turn out the way it did in 2008.
Yeah, we'll see. He did well enough out of that. He doesn't need any more money.
Correct.
Patrick, as always, thank you for joining us. Very interesting conversation as usual. And we look forward to having you back next month.
Cool. Thanks a lot.
Cheers.
Have a good day.